Hi, everybody, and welcome back to Fang Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. By the way, I hope you like my new sweater. It's made of alpaca wool, and I got it on sale, even better. Well, it's a virtual sweep. Meta, Alphabet, Microsoft, Tesla, and NVIDIA. 5 of the 8 Fang stocks all broke out this week and could therefore be heading higher. Apple, of course, remained sort of a buy because we never actually got a sell in the stock. Although, as it turns out, and as we will see, there was a sell signal which we can only see now. And then there is Netflix, which is now the laggard after its superb run. Almost to my bubble price target, that's 7.4 times book, but remains south of its own key breakout level. The only stock to fail to break out turns out to be Amazon, now that we have its new balance sheet in. It tried to break out on Thursday, but it failed to do so on poor results. It's the earnings season, and most of the Fangs have now reported, for better or for worse. Mostly, I have to say, for the worse. The reports have been, in the main, somewhat on the woozy side, to coin a phrase. But the market seems to have decided that the Fed doesn't matter anymore, that rates may be high, but they're coming down somewhere in the misty future. Inflation is, or will be, under control. And all is right in the universe. In any case, the Fang stocks are leaders in the layoff department, and so earnings should naturally rebound due to the big savings that the layoffs will produce. That's the theory, anyway. One can fight or take flight, and the Fangs have decided to take flight. And SVA is right there with the buy signals, which I hope you have noted and were watching for, notably those potential signals for Microsoft and Alphabet, with Amazon as yet a possibility only. Now, a small note of caution. Over the years, we have developed a rule of thumb to prevent us from being too bullish or bearish on the way down. When we see a breakout or a breakdown, we like to see that first, the price gain does exceed 3%, and second, that the breakout holds for 5 days. In markets driven by momentum, on occasion, a stock will exceed its boundary condition and then retreat to and below it again. I will have to say, however, that such a broad-based breakout of the Fangs would seem to mitigate against a false breakout happening this time. The one thing that does stop me from becoming too optimistic that this is the real thing is that the Standard & Poor's 500 has not broken out over its super growth price. That's 3.5 times book value, a very significant valuation in the mathematics of accounting dynamics. And by the way, it hit that with absolute dead precision. Anyway, until it does, I have to remain somewhat from Missouri in terms of this being an overall bull on the market. However, as the S&P is right there as we speak, or just a little bit below now, we should get a resolution to this conundrum very soon. Finally, keep in mind that, as you will well recall from past experience, when we see a breakout, we typically get a pullback to the breakpoint. If you choose to buy any of the breakout stocks, try to do so as close to the breakpoint as you can. Fortunately, the Phantom Fang portfolio, if such a thing could even be said to exist, already holds Apple, and I have to say, sort of, and Netflix, and Meta, and Tesla, with NVIDIA kind of there but lost in space. To that, with our rule of thumb reservations, I could perhaps now add Microsoft and Alphabet, with Amazon perhaps waiting in the wings for a virtual clean sweep of the Fang stocks. Now, before we take a close look at those Fangs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, of course we have to start off with Meta, didn't it, after that absolutely astonishing breakout. Indeed, I had thought after our buy in the breakout of the mid-growth price, although we could have bought earlier, as I had indicated, but the breakout there, that I had thought that the super growth price might be it. However, the market has taken that choice out of our hands, hasn't it? And it's already blown through the super growth price. Now, why do you suppose that that's the case? Well, let's just remember, and let's take a longer look at Meta, and we'll see why this happened, and why maybe it's likely to persist. If we go back for, well, the past 5 years, and actually even longer, we see that the fair market value, the intrinsic value of Meta was quite a bit higher than it is now. Now, what Zuckerberg, of course, has promised is two things. First of all, he's buying back shares. And secondly, he's going to focus on the profitability of the company, so that we may well see that fair market value go ticking back up, in which case then there may be more, and perhaps even a lot more, to go with Meta before it's finished. In the meantime, our stop loss point would be the super growth price now, and but as I say, things look optimistic. Alphabet, well, Alphabet, here's a bit of an issue. You can see that the fair market value is hooking over here and falling, and perhaps pulling the shares back to where they had been in the past 10 years, which have been sort of either side of the super growth price. Now, the company did cut a lot of its staff. However, it was basically rescinding what it had hired in the third quarter. So we don't really know whether that's going to affect the profitability of the company, and therefore pull that fair market value back up again. If not, I would be somewhat concerned that my downside target of the super growth price remains in force. Microsoft, well, Microsoft had quite an indifferent quarter. However, with the rest of the Fangs, it's pulled itself and pulled it back on side over its HB1, which is 9.5 times book value. But it's been doing that now for some time, hasn't it? Back and forth. And what we call indecisive trading. And when we have indecisive trading, we are very, very cautious. As I said, using my rule of thumb, my 3% 5-day rule, we have to see whether Microsoft can actually hold above its HB1. So we can be cautious and careful and wait, and particularly wait for that breakout pullback that always occurs. Amazon came right up dead to its bubble price as it transpires, based on its updated balance sheet, which is now, that breakout is now up from where it was the last time that we looked. So we do not have any kind of a signal for Amazon, and Amazon's results virtually across the board were quite indifferent. And as we can see, the fair market value continues to slide lower. So watch this one to see whether it can break out with the rest of the Fangs or not. Tesla, well, its fair market value may be falling, but people love the stock, and after a beautiful bounce of its bubble price, a breakout of its HB1, some effort here at its HB2, which is 12 times book, but the stock has broken out further. Again, I would look for a pullback to its HB2, that's about $180, before I would take action, although the stock is strong today. But watch, as I say, for that confirmatory breakout pullback. NVIDIA just keeps on going, and you know, it's been kind of riding with the recovery in the cryptocurrencies. So we'll see if that continue. Very, very poor value, and about half of the semiconductors look awful, and the other half look okay. So this is the one that looks okay. Finally, Netflix, okay, which had been my favorite stock of the Fangs after its bottom, almost at its super growth, not quite. As I said many times, I think people anticipated that. However, the stock has now pulled back to my target at its bubble price, and it's going to be interesting to see whether the stock can break out here. Of that, I am not sure. This is definitely a tough and overcrowded industry to be in. Finally, we got that new balance sheet for Apple, thank goodness. Or not, as the case may be, because look, okay, here's that little triangle there that tells us that the new balance sheet was in. Well, I had been expecting rather, that we could see that buyback trend would take the balance sheet down to about $110. I think 110, 112. Turns out, didn't happen, and the stocks or the company has been slowing down its repurchases, and as a consequence, had we known it at the time, we had ourselves a sell signal below its HB6, which is 33 times book value. Well, it's pulled back to the line, and now, kind of like Amazon, we have to wait and see whether we get a breakout or not. To sum up what we've just seen, you can see at a glance why one could, or maybe should, be bullish on Meta based on its own SVA history. The problem with Netflix right now is that it has a significant hurdle to overcome at its bubble price. It's 7.4 times book, and it has a crowded industry issue. I would now classify it as a weak hold. I'm also optimistic, but very cautiously, towards Microsoft and Alphabet, as they both have been dithering on either side of the recent breakouts for some time, and neither has enjoyed an exactly stellar fourth quarter. Amazon is still trying to decide whether the bubble price is enough or more is possible. This is very clearly a TBA situation. We are not buying right now. I guess that we stay with NVIDIA on its breakout, although a breakout pullback or worse remains to be seen when it reports, which is much later than all the rest of the Fangs. Tesla has been stellar off its bubble price low and continues to soar with the current Fang stock sentiment. However, it's not cheap and is in an increasingly crowded marketplace. Let's make sure that HB2 price can hold. Finally, Apple did not have exactly exciting numbers, virtually right across the board. As it turns out, with the updated balance sheet, the shares actually did render a sell signal. But it doesn't count, I'd have to say, if we missed it because we couldn't see it. As you well know, for someone I have For some time, I have actually disparaged Apple on general principles. Right now, the shares would have been a sell, and we have to hope that this Fang rally can pull the shares back on side. I will again conclude by noting that if you want to learn more about SVA and missed our introductory webinar in early January, you can click the link at the end of the video right here. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you